Mr. F. Victor Gudele is an experienced and certified financial modeler. He has skills in financial modeling, project finance modeling, valuation, financial analysis, corporate trainer, data presentation, Office, Microsoft Office, including Excel, PowerPoint. He has also worked and had experiences in various fields. So, ladies and gentlemen, I welcome our first speaker for today, Mr. Victor Ogundele.
Yes, good afternoon, everyone. Good afternoon. I know some of us are not connecting from Nigeria, so let me kind of say my greetings round. Good afternoon, good morning, good evening, irrespective of where we are joining from. So I believe we are all doing fine today, and I'm saying my happy Sunday to everyone. Good to have you in our session today. So let me see. Okay, so let me try and share my screen. Let me share my screen for us to see. Okay, all right. So please, I would like us to confirm if you can see my screen, so that I'm sure we are on the same page. You can also type in the chat box. Let's kindly confirm if you can see my screen. Okay, all right. Okay. Oh, okay. Great, great. Thank you for that. Thank you for that. Yes, happy Sunday to everyone, and I trust it has been a very, very great week for every one of us. All right, and today we'll be having a short discussion on what we call standard practices related to financial modeling and valuation. The funny story about this is, for some people, there's this debate about this financial modeling standard. Some even said it is old, some said it is archaic, some are even tired. The funny part of this is many people don't even know, they are not aware that this standard kind of exists. And that's the truth about this whole thing. Financial modeling is a profession on its own, and there is no profession that does not have a standard. For the accountants, we have our ICAN relation with our standard. So they tell us, oh, standards, something says this, standard something, and the whole thing is just to have that uniformity. So the finance analyst guys, we have our CFA. All right, CFA tries to certify us and try to uniform how we get to do things professionally. So the lawyer guys, they have their own. Let me ask us, what do you think kind of govern how lawyer, what's govern their professionalism? Can we type in the chat box? Yes. For the lawyers, what do you think? What kind of govern their own professionalism? So maybe we should restrict it to Nigeria. Yes. Let's make use of the chat box. What do you think? Which standard kind of govern how they kind of do things to the lawyer guys? So let's type in the chat box so that I'm sure that we can all hear me. The constitution, perfect. Thank you for that. Yes, so the lawyers they have their own constitution, and irrespective of any professional field you are, for you to stand out, for you to be good at it, definitely you need to understand the standard. You need to understand the rules. At times, yes, you might need to understand the rules and forget it, right? Because there will always be an exception to every rules that we know. Now, according to the 2021 Financial Modeling Survey, 95% of modelers believe that standards are very important. As I said, many people are not aware. Some believe it's really not relevant. Different opinion, right? But the truth is, irrespective of the profession you are, it's always good for you to know the standard, know what kind of govern how you get to do things. 95% believe modeler uh, that standards are very important. And 41 of the modeler works in organization where standards are applied rigorously, or those big four international companies, right? In professional services firm, the figures kind of goes up to like 64% because standard is what they really call professionalism. Now we have different standards, and that's the funny thing about this. We have what we call in-house code, whereas organization have the way they kind of do things, they have the color they use, they have the way they approach building of a model. Then we have a fast standard, and for Financial Modeling Institute, which kind of certified us as a financial modeler, they kind of mark their own exam script based on fast standard. It's actually an acronym. Mazars, which is also a company, international company, they make use of their own smarts, which they develop. We have the ICAEW code, we have the BPM, then we have the mix of others. But above all, I think fast standards still stand out. Then each organization now, they tend to modify that fast standard to fit into their own organization, and that's why you see that in-house code seems to have the highest votes in this. But before we jump into that, let's take a look at some of the learning points we'll be discussing today. We'll take a look at components of modeling. What is this modeling of a thing? I remember then when I was in school, they keep shouting model, 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 model. I'll be like, what is this model? What is this model? Right? So we'll take a look at components of model. Before you call anything a model, what must it entail? And that's kind of flow with you understanding the rules and the standard. So we'll be focused on the FAST standard. FAST is actually an acronym. As I said, if you want to write the exam, definitely you will be applying the FAST standard in your exam, right? Because that's what they will use in marking your script. Then we take a look at a sample of that standard. So we are not just talking about the standard. I'll show you a model which kind of display the standard, how that has been applied. So now component of model, component of model. So when you hear anything like component, basically what it's asking is what are the one or two things we must put together before we call this thing this name, right? When you hear component, one or two things that you must have before you call this thing this name. So let me ask you, if I ask us what are the components of a car, yes, can we just type one component of a car that you know in the chat box? That is, what must you have before you call something a car? Let me hear from us. At least if you don't have a car, you've seen different cars, right? So definitely you must have engine. Thank you for that, hello Anifemi. Right, what are the things before you call something a car? You must have a brake, right? You must have a seat, you must have a tire, right? You must have your windscreen, you must have your steering and all those. Exactly. So if I ask us also, what are the components of a family? So definitely, we know we must have a father, we must have the mother, right? We must have their children, maybe their sons, their daughters, their cousin, their nephew. We have the grandma, we have the grandpa. Then we have our, you know how funny a Nigerian family can be, right? Then you have your neighbor family. We have my dad's friend family. Then you have the boyfriend, the boyfriend, the girl boyfriend, the male girlfriend and all those things. They become part of part of the family. That's how funny Nigeria can be, right? So basically, so that you understand when we talk about components of model, before you call anything, yes, neighbor family. Thank you for that as well, right? How funny that can be. So before you call anything a model, basically it must entail just three things. You need only three things. And the first one you need is what we call input. Some call it assumptions, while some call it drivers. Financial modeling is all about drivers. That's the truth. I want to forecast this line item. What are the things that can drive it? So you must have your inputs, or they call it assumption or driver, and these are hard-coded values such that if you change it, they definitely have impact on the output of your model. I'm still going to do sample for us. So note this down. The first one is input, or they call it assumption, some call it driver, right? These are more like the raw data that flow into your model directly. And the second one is what we call our calculations or schedule. So this is more like our engine room, where all your calculation, all your workings, right, where you just do all your rough work. So you have one part which is input, you have the other part which is calculations, where you do all your rough work, do all the magic. And one thing about engine room and what about calculation and why we call it engine room is because it connects to your input, do the processing, and do what? And feed that out to our output. And feed that to our what? To our output. Now, it is the output that determines the kind of model we are building. Now, let me give you a demo of that. Let me open my blank Excel. let me type 1 here, and let me come here and let me type 2. In fact, let me put it in one input cell style. Okay, now I have 1 here, I have 2 here, and let me come to another cell and let me type equal to the cell that contain this 1, as you can see, plus the cell that contain this 2, and let me press enter. Now let me ask you, do you know that this is a model? Do you know that what I've just created now is a model? If you believe, type yes. If you don't think so, type no. Let's make use of the chat box. If you believe this is a model, based on my explanation of components of model, must have input, calculation, and output. If you believe this is a model, type yes. If you don't believe, type no. So let me hear from us. Let me hear from us so that I'm sure we are still together. So here I type 1, here I type 2, and here I come here and I'm typing 3. So Joshua is saying I can't see the screen. So maybe you need to refresh your browser. Yes. Okay, so Luanifem said I'm not sure what I'm saying. So I can't decide. Okay, what you have on the screen is one Excel file, right? And one part of it you have 1 written in one cell, you have 2 written in another cell, and then you have 3. Can we see that? So in case you cannot see my Excel screen, you might need to just refresh your browser. Right? So basically, you can't see that. So just try and refresh your browser. Yes, so that you can see my screen. I currently have one Excel file open now. So basically, you have a 1 here, you have a 2, which are what are inputs. Okay. So which basically this 1 is an input, this 2 is also an input, and these 3 contain you can see the calculations, right? And also the outputs. And now what makes it a model is because we can always go back, change this 1, change it to 5, and it automatically affects the outputs. I've changed this 2, change it to 4, and it affects the output. In fact, the common one we do in our school days, they will tell us that y is equal to a plus b x. So to the economic or statistics guy, they call one dependent, they call another one independent. Basically, it's still almost the same thing because A is an input, they call it independent. B is also an input. In fact, let's leave the X for now. B is also an input. And irrespective of anything that happens, right, to A or B, it will always affect the result of Y. And basically, that is what they call a model. Right? So back to my presentation. Now that we have the understanding of basic components of model, when it now comes to type of model, it is the output that determines the kind of model we are discussing. So the first one, right, if it's a financial model, then basically that is our 3 financial statements, namely our income statement, balance sheet, and our cash flow statement. So it is the type of model that now it is the type of output that determines the kind of model we are building. So we have some, they call it statistic model, they have some stochastic model, they have some operational model. But when it comes to financial model, the output is our income statement, balance sheet, and cash flow. Then we can have our analysis, evaluation, all those kind of come into play. Now let's go straight and let's take a look at our FAST standard. As I said, FAST is actually an acronym, right? And you as a modeler, this is very important that you understand the rules, even though there will always be an exception to the rules, but it's always very important you understand the standard, understand what it's saying. All right, what makes a difference between anyhow person and a professional is because of the way you get to do things, right? So someone is giving this person a job, is telling you I can pay you 100,000, and the same person is approaching another company and telling them I will give you 100 million for this job. It's not because of anything, right? They might be able to do it the same way, but that professionalism, application of that standard is what makes you different. So before you jump into you knowing the main thing, is always good to understand what are the rules that govern this thing. If you get to any new location, it's always good you try and understand the environment, how they get to do things, what's the standard, what's the way of life there, right? Once you get that, it will be easy for you to flow. So the first one is what we call you understanding concept of flexibility. So F stands for flexibility. And basically what that is saying is models must allow users to run different scenarios, do a lot of sensitivity, and make modification over an extended period. Now, when you build a model, it is assumed that you should be able to send the model. Let's assume you build the model in the corner of your room. You'll be able to send the model to someone in USA, Canada, India, and they can pick up the model, understand what you've done, and make necessary adjustments. Now, that can only be achieved when you build your model according to the standard, and one of it is flexibility. You think about it, okay, what if they want to change things? You are saying my revenue will grow by 5%. Then the scenario is, okay, what if revenue did not grow by 5%? Let's say revenue kind of grow by 10%. What would be our revenue? What if revenue kind of increased by 5%, by 2%, which is lower, right? What would be our what? What would be our revenue? What would be those impacts? And a good example of it is this. This is a sample model. And you can see we are saying this will be our cost inflation for the respective period. And you can see we've created 3 different scenarios. What if inflation kind of go below what we forecasted, or even go higher than what we forecasted? What would be the impact on our business performance? And basically that is what our flexibility is saying, that whenever you are building your model, you need to think in that manner, right? You send it to your model, they can change things, they can modify. So there's a flexibility, there's automation of the model, and that's why it is called model. Let's look at the second one, right? So based on our first standard, is saying model design and modeling techniques must allow models to be both flexible in the immediate term and adaptable in the longer term, right? Which means model must allow users to run different scenario, ask different questions. What if our revenue fall by this percent? What will be the effect on our profitability, right? Sensitivity, sensitize. What will be the change in this particular assumption on our output, right? So those are basically what flexibility is saying. Now to the second one, which is A, and it's saying you reflecting appropriate assumptions. Now remember, it is financial modeling is all about we having a look at the future. We just want to represent the future, what the future performance will be. So which means as much as you are trying to be, you really cannot be 100% accurate. That's the truth. There's no model that is 100% accurate. There's no business that its valuation is 100% correct. So do not lose the sight of what a model is. It's a representation. So don't overstate your assumptions, right? Keep it, be moderate when it comes to you dealing with your assumptions, right? Model must reflect key business assumption. Don't overstate it. Don't put irrelevant assumptions, right? Must reflect key business assumption directly and faithfully without being overbuilt. If the assumptions are not related, if it's not making sense, you don't need to add it. The model must not lose sight of what a model is basically a representation of reality and not reality itself. Now, the other one is structuring of your model, which is very, very important. They call it consistency in our layout and organization. Now, let me show you that model again that I showed us. So, our standard is saying whenever you are building your model, number one, your model must not have multiple worksheets. On the other side, it's saying anything related to input should always be in one single worksheet. Things that you know that your clients will change, can more like the driver of the model, your assumption should always be in one single worksheet. Now, you can see a cover page here. You can see a cell style. This part of you structuring your model very well. All the values in your model must have a very clean and clear description. So you can see here, looking at this, if I send this to a client, they need to read this style. Input cell style, which means any cell that has been formatted this way means they are hard coded entry. there are data that you can change. This means the data is being linked from another worksheet to another worksheet. This means it's contained a formula. And if you go straight to my input, it is easy for you to see that. Number one, the description that I've given, taking a look at this value, it's very easy for you to understand that, oh, this has actually been linked from somewhere. This one is a formula, is a formula, is a formula. This is an input, right? And it's easy for them to update as long as they understand that, oh, these are input, these are input. And also, you must maintain almost the same structure in your model. Look at this, look at from 1 to 8. The same headings. If you go to the next worksheet, you see the same thing, the same headings, the same structure. You go to your monthly calculations, right? The same structure, the same headings as well. So it must be the same across all your worksheets of your model. And basically that is what structuring, consistency in model layouts, and how you organize it, because that is where the first understanding of your model comes into play. So rigorous consistency in model layout organization is essential to retain a model's logical integrity over time. Now, the last one, which is understanding of your model, we call this transparency. Right, you see many people build a model, you try to walk yourself through the model, and you just see some funny formulas, some if over if, some this and that. In fact, our standard gave us something, we call it rule of thumb, that any formula you put in your model must not be longer than your thumb. Keep it simple, right? Instead of lopping a lot of formula inside one cell, instead break it down. Make sure it is very easy, and in fact doing that kind of reduce your model being exposed to errors, right? Model must rely on simple, clear formula that can be understood by other modelers and non-modelers. When you're building the model, think that your users might not even have understanding about the model concept. So try and keep it simple. Confidence in a financial model's integrity can only be assured with clarity of logic, structure, and layout. Right? It's all about that transparency. And it's saying fundamentals to supporting each of these aim is the root definition of the term analysis. We call it concept of breaking things down. Keep it very simple. Keep it very simple. If you take a look at this model, it's kind of very easy for you to understand. Make the formula very simple, straight to the point. And our standard is also saying input, let it be in one worksheet. Anything related to calculations, your schedule or your rough work should also be in one worksheet. Keep it simple and make sure you break everything down. Do not make the formula complex. Right? So now that will be the last one, right? Simple, saying the formula, keep it simple. It's always good for you to understand this standard before you jump straight into it. So before I'll go, I would like to share one link with us so that you can always read more about this our standard that I've discussed, right? Both the fast standard and other related standard. It's very important that you understand this, so by the time you are building your model, you learn how to do things the right way. Right? I have a lot of great guys that they know how to build model, but what they really cannot build model that can be generally acceptable, such that you pick their model, send it to anywhere, and someone else can pick the model. They build a model, only them understand the model, and that is not the purpose of the financial modeling of a thing. So learning out all these rules and this standard will really take you a long way and make you different. Yes, I've seen someone that learned model within 3 months and someone that has been building model for the past 5 years, right? One of them built a model and send it out, the other guy to build the model. The other guy that learned it between 3 months, they, they they did not have to call the guy to understand everything. In fact, it was easy for them to make necessary adjustment. But the other guy, they had to be calling him, hey, what have you done here? What is this? What is that? Right? So professionalism comes into play when you understand the standard and you then apply the standard. So this will be the end of my presentation. I think I was given 20 minutes for the presentation, and then we can now go straight into our question and discussion. Yes, I think that will be the next 10 minutes. All right. So our coordinator, let me drop my mic here. So in case anyone that wants to ask a question, they can then go ahead and have a discussion.
Thank you very much, Mr. Victor. I'm sure we learned a lot. Your model should not be more than a worksheet, and your formula should not be longer than your thumb. Those were the two key points for me. So do we have any question or clarifications? Anything at all?
Okay, so as part of maybe my own special gift to us, so I know some might want to request for the model that I was sharing with us, right? So maybe you've started the learning of your model and you just want to get your hands on some practical models that have actually been built in the past, so that you can kind of leverage that, right? I think so. Let me just try and upload it so that I can share the link with us and everyone can access the model. All right, so you can use that to also keep up our learning. I think that will be fine, right?
Thank you very much. We sincerely appreciate it. So please, if you want to ask any question, you can unmute and ask your question.
Okay, right. So I'm dropping the link in the chat box. Yes. So you can as well, maybe you can use the chat box in case you have any question or clarification as well. So I've dropped the link in the chat box. You can kindly just click on the link, then download the file. So when you click on it, it will take you straight to your browser like this. Then click on the file tab. Click on the file tab. So when you click on the file tab, you see the download option. So you can download it as an Excel file. Alright, so since there's no question from our guys today,
Sorry, I have a
okay,
question.
alright, please kindly go ahead.
Okay, thank you. When preparing our model, are we to use just the Excel shortcut or the mouse too? Because I make use of both.
So using mouse or using your keyboard and shortcuts is all about efficiency, and at times you might need to build a model that might take your times, right? You have a model you build that will take you for like 2 weeks or a whole month, right? So the concept of using mouse or keyboard shortcut is just to help with your efficiency so that you are able to work very, very, very fast, right? So someone like me, I use more of shortcuts. And also, as I said, writing the exam, your Excel skill is needed up to 60%. Yes, and the exam, they will give you a case study. You build your model from scratch from a blank Excel. And normally the model is supposed to take you something like 7 or 8 hours, but they will be giving you 4 hours. 4 hours to build to actually use and build the model during the exam. So which means you need to learn how to use all Excel shortcuts in order to get your work done as fast as possible. Yeah. So but I will always, at least to the modeler, you are always encouraged not to use your external mouse, but try and get used to your keyboard and lots of shortcuts. Yes. Okay, so Ifeoluwa is asking, sir, is Excel the only tool needed to build a model? Oh, for now, we build our model in using Excel. Yes, yes, it's the tool that we use now, at least for now. So maybe very soon, maybe you might have another tool, but for now, Excel is still the number one tool that we use in building our model. Basically, our financial model. Yes, yes. All right, so do we still have any other question before I will drop my mic? Okay, all right. So thank you. I think I'll be dropping my mic now so that the second presenter can come on.
Thank you very much, Mr. Victor, for sharing your knowledge and also further resources. We sincerely appreciate. Thank you. So moving on, we'll be having our second speaker.